Lori Heinel is here. She is the Deputy Global Chief Investment Officer at State Street Global Advisors. And Lori, these numbers stronger than expected. What's it make you think about the markets?
I gotta go.
Well, first of all, yeah, it was pretty strong across the board, not just the print, but also some of the revisions from past months. Look, we've been pretty encouraged about the global economy all this year. We've seen improvement, even in the dark of the summer, when a lot of other people were thinking that we were going to go into recession. We sort of felt that the consumer and the services sector would help us kind of power through. And this is just validation that we are in a bit of an upward momentum here.
You know, you wonder, one thing I would just wonder, thinking about the knock-on effects of this is certainly good for trade negotiations, I would argue, for the United States, right? The U.S. is sitting pretty right here.
Which means
and China's
before
a little bit
December 15th. If it looks good for the U.S., strengthens their hand, does it also strengthen the president's resolve to say, maybe it pushes us towards...
Are we playing it forward, though, too much? What are the job gains going to be in May, June, July of next year?
I was just going to put a little bit of rain on the parade, Joe, which is that I don't think the run rate is 266.
We had a monsoon with Andy. A little bit of you got a little drizzle is going to be
a little
okay.
Drizzle, which is that I don't think the run rate is 266. I think it's fair to say that somewhere in the 180 to 200 range.
Think if it was 200,
because
Mark said
that's a great number. It's double what we think we ought to be able to do, and I don't have a good explanation.
And you don't know where they're coming from, and you don't know whether.
I mean, I can look. I was looking before.
No, the participation rate, can that furnish jobs in May, June, and July of next year?
You can bring young people back to work. You can bring men 25 to 54 back to work. And one of the phenomenon of our day is 65 and over increasing their participation rate. Right. They're still actually bringing it down because they generally, there's more of them and they work in less numbers than others. Yeah. However, larger percentage of them now are staying in the workforce for whatever reason.
If millennials decided to start working, would that help?
I don't believe millennials will ever begin to work, Joe. That's
not true. We've got lots of them here.
I'm the defender of millennials on this table. I'm playing with Joe.
And I'm just kidding.
You're not, though, Joe.
I am.
Are you changing your mind on millennials?
I love millennials.
You do?
How can you not? They're a group of people that are 25 to 40.
Admit it, Joe, you're just focused on the demographic for our ratings is really what you're really all about.
No, I think he's been talking about how...
Has he changed his mind?
How can you not and when they all do go through this kind of stuff.
How about Gen Xers? What do you think of that?
Is that before?
It's after millennials.
I like them. I like Gen Zers even more, though. My kids are,
They're good. They're good.
Maybe it's the Wharton effect. Anyway, where are we going to?
Where do we go from here?
Yeah, where are we going to get the workers next year?
Where are we going to get the workers next year? Well, as Steve said,
are we wrong?
Even just to keep pace with the working age population, we should still expect a number probably in the low 100s or around 100. So it's going to continue to be probably overall a constructive story. Although print to print, right? There's always going to be volatility, and so there's a lot of excitement around this table right now. It may be a little bit less over the next print, but generally the economy continues to be strong.
Lori, I want to get back to you on this. What do you tell investors to do if the economic backdrop is looking stronger? You got to take that together with the idea that this strengthens the president's hand, so maybe the trade negotiations get a little hairier right now. What would you tell people to do in terms of investing?
I think that's a really important point, this whole trade issue, because all year long, that's been what's giving the market sort of the heebie-jeebies, right, is that every time that we start to feel as though we're getting on some sort of a footing, we have a breakdown in the trade negotiations, and then that feeds back into slower manufacturing and less business investment. So generally, we've been constructive. We've been saying to our investors that we do think that the economy is going to improve and that these headwinds should dissipate. But as you said, a strong number might actually lead to the opposite result. So we're still constructive. We're still in risk assets, and we still think that the 2020 will be a good year because growth will continue to improve.